Looking ahead, challenges and opportunities in the changing world. Welcome to Talking Economics, podcast launched on the occasion of the 30th anniversary of the Center for Economic Research and Graduate Education, Economics Institute. Inflation and monetary policy have become hot topics recently. First, it seemed that the world economy is heading towards recession due to the COVID-19 pandemic. Now we are facing huge increases in energy prices and soaring inflation. The latest inflation number in the Czech Republic is for April, when the inflation exceeded 14%. What are the main causes of such high inflation? Does the war in Ukraine influence inflation in the Czech Republic? Does the Czech National Bank fight against this inflation? And will the inflation come back to low levels? With my today's guest, we will talk about these questions in more detail. It is my pleasure to welcome Dana Hájková, CERGE-EI PhD in Economics alumna and Director of the Monetary Policy and Fiscal Analyses Division in the Czech National Bank. Welcome, Dana.
Thank you very much. Hello, and thank you for having me.
We are happy to have you here. In this moment, as we said in the introduction, inflation and monetary policy are the topics of the day now, right? Everybody is watching how inflation is skyrocketing, I would say, or it's probably not the correct word at this point, and we hope that it's not go any further. Anyhow, what are the main causes of this inflation?
We see the causes both on demand and supply side, and the factors are both domestic and foreign. On the supply side, we see a huge increase of cost of firms which come from foreign sources, increase in energy prices, increase in agricultural commodity prices, other commodities, raw materials, and we see also problems in global value chains, and these logistic problems also increase the inflation pressures by limiting the supply and increasing the transport cost of production. The cost factors and their increase are also stemming from the tight labor market in the Czech Republic, where the Czech Republic has extremely low unemployment rate. It has had the lowest unemployment rate in the European Union for a long time. And this tight market, which was tight already before COVID and didn't cool down during COVID entirely, is now again overheated, and the wage pressures are also adding to the cost of the Czech firms. So the Czech firms are facing a huge increase in costs, and at the same time, they are facing extreme demand. This demand stems from very good financial situation of the Czech households, from the good labor market position, their good labor market position, but also very
maybe postponed demand after COVID, or?
Yeah, exactly. So their financial position has been also supported by the fiscal policy, which immediately reacted to the COVID crisis by measures to stabilize household income and firm viability, which were absolutely necessary at the time, but later on they actually turned more pro-inflationary than we expected. And the post-COVID recovery and economic dynamic was much faster than actually was expected, which reflected this good especially the good situation of the households and the extreme demand of the household. So during COVID, demand remained quite strong and concentrated especially in product or goods. And the global demand for goods matched or faced the problems in logistics, in the global value chains, which also added to the increases in prices.
Mm-hmm. And this was the situation already at the end of the last year, right? And at the beginning of this one. So before the war started, the Czech National Bank started its fight against this inflation, right?
The Czech National Bank saw the inflationary pressures coming. It has already in late spring last year indicated that the next steps will need to be towards increasing rates, because the rates were extremely low again and really below our policy neutral levels. So basically monetary policy was easy, and the Czech National Bank saw that in the forecast that the inflationary pressures from the demand will come, and that monetary policy will need to tighten. And the Czech National Bank started to increase interest rates already in June last year. First in small steps, kind of taking food from the gas. Then when we faced more and more inflationary surprises, it was obvious that monetary policy needs to tighten more than was originally expected. Then in autumn we had the surprise increases in energy prices, which really reflected in prices of electricity as well as oil. This was partly maintained or fought against by the Czech government by relieving the Czech households from duty, value-added tax duty related to these prices. But in January this ended, and the increases in prices fully transmitted to inflation. Then the war came, right? And then the war came, and there were more increases in energy prices, and so which directly influenced both the prices of electricity and gas for households and firms, of course. And through the increase in cost of firms, it naturally goes towards the pricing of their products and services. And not only energy prices, but also other materials, as I said, agricultural commodities, also raw materials, metals. The scarcity and problems in global value chains also aggravated by the war brought even more intensive inflationary pressures. So it seems that the foreign and really brought in the inflation from outside is an important factor. Can you do something else with this? Interest rates are not going to have an impact on this, right? So what about working with the exchange rate? I think that I would think it differently. We definitely believe that interest rates are working in this environment. By the end of last year, we were expecting or estimating that the domestic and foreign pressures were about half and half. With the war in Ukraine, the inflationary pressures are more towards the foreign influence. However, the increases in interest rates anyway are very important to fight the high domestic inflationary pressures which we were facing in the past quarters. The labor market tightness, the extreme demand of the households, and also by interest rates we are making influencing households and firms' decision towards consumption and investment today versus tomorrow. This is an important channel which works even in this environment, because we need to cool down the demand when we know that the supply is somehow limited, damaged. Yes. Of course, the supply shocks in the past, they tended to be more short-termed. And monetary policy could think about looking through these shocks. However, as we now see it, they transmit into inflation, and they have a bigger tendency to stay, and inflation is higher, so it is very important actually to react to them and to steer the financial planning in the heads of households and firms, so that we really tighten monetary policy and cool the demand now. Also, interest rates, an important channel on which we rely is the exchange rate channel, and there is the influence of interest rates on the exchange rate. So increasing interest rates, we are kind of making more attractive investment in Czech assets, so the Czech currency appreciates, which has direct impact on inflation and indirect impact on economic activity and then inflation. As you mentioned, the using of the Czech koruna
and the
interventions. Obviously, it's a well-known fact that the Czech National Bank and the Bank Board decided to intervene on the koruna market in the direction against further depreciation of the koruna, because unfundamental and large depreciation and volatility is undesirable for both the stability of the Czech economy and inflationary developments.
But you don't want to use it just to fight the inflation as such. It's more for calming down the unexpected shocks or volatility. This is
how we used it by now. Our main instrument is still interest rates, and we still rely on the standard channels of transmission.
So when will the inflation come back to the low levels? Your target is 2%, right?
Oh yeah, that's true. Our target is 2%, and we estimate, our last forecast estimates that inflation is culminating in this second quarter. So, and it's going, according to current forecast, it's going to culminate in June and at 15%, and then because of cooling down of the foreign inflationary pressures, of the foreign cost growth and energy prices, as well as of cooling down of the labor market, domestic labor market, the domestic cost, and cooling down of domestic demand. Inflation will start to decline and decline gradually already during the second half of this year towards single digits and during the next year towards 2%.
We have something to look forward to. What about the other central banks? We know that Czech National Bank was actually one of the first banks in the world to start tightening the monetary policy and was criticized for that. What about the rest of the world? Are they following suit? Are they trying to cool down the global demand?
Yeah, Czech National Bank was one of the leaders of seeing the inflationary pressures coming and starting to tighten monetary policy. One of the reasons obviously was that we are a small open economy. The inflationary pressures were stronger before COVID, the labor market tight. So we saw that we will need to tighten monetary policy, and we communicated it in advance. Many other central banks followed suit or were even by several days faster than we, but most of them followed suit, and now the global central banks are also starting to increase interest rates quite rapidly by historical terms, like the Fed, or starting to communicate that they will increase the interest rate earlier than they first expected, like the ECB now. So now the central banks generally are acknowledging the strong inflationary effects and the inflationary pressures and the strong need to tighten monetary policy to fight against this inflation, because if they are not fighting this inflation now, then the cost of fighting it later, when it's more incorporated and established in minds of people, would be much more costly. Yeah, and what is very important in this environment and situation is the development and formulation of inflationary expectations. Because inflationary expectations have some tendency to be self-fulfilling. It's very important that central banks show that they fight against inflation, and they will bring inflation back towards targets before inflation sets in the mind of people, and people start to adjust their behavior to environment with higher inflation. That would be then very costly to bring inflation down towards target.
When we were fighting the opposite situation during the pandemic, we talked about unconventional tools employed by some central banks to fight the recession and the situation. Do you see room for employing unconventional tools in this situation, going in the opposite direction, or are we not there yet?
The unconventional tools during the last crisis were implemented mostly because monetary policies needed to ease more than interest rates would allow. So different central banks chose and implemented different unconventional monetary policy tools which suited their situation. So these tools were used to ease monetary policy. Now we need to fight against inflation, so we need to tighten monetary policy, and there is big room to increase interest rates for many banks yet, and actually to tilt from or go from easy monetary policy to tight monetary policy. So
you still see room also in the Czech Republic to use the standard tool.
Yeah.
Which will fight it. I don't know what we are gonna do once the Czech Republic gets and adopts the euro, but until then, we can always ask the question. So, how is the debate about euro adoption affected by the recent situation?
Czech Republic is ultimately obliged to adopt the euro. However, it has some ease in timing of that adoption. Whether and when to adopt the euro is a political decision. It's on the government to decide when we start the preparation for the euro adoption. It will take some time because before the Czech Republic adopts the euro, it needs to fulfill the Maastricht criteria and other requirements. One of them is exchange rate stability, which is measured by the functioning of the exchange rate within such so-called exchange rate mechanism 2. And in order to assess this criteria, we first need to enter this regime or this mechanism. So, and it will take some time. The minimum time to be there is 2 years. So there is going to be some lag.
But what about the economic reasons for or against?
Yeah. So these are the steps needed to be taken, and the clear arguments for euro adoption for an open economy like the Czech Republic is that by the euro adoption the exchange rate risk ceases, and many transaction costs in international trade disappear. So this is one main reason pro or the argument in favor of euro adoption in the Czech Republic above actually the actual obligation. But the cost of euro adoption will be the abandonment of the independent monetary policy, and this might bring some cost. The literature says that the main cost would be increased volatility of macroeconomic variables.
So you wouldn't be able to fight the inflation the way you are doing now, right?
Yeah, the monetary policy of European central banks would be the monetary policy applied here. So we would have much lower interest rates here in the Czech Republic too.
But would the inflationary pressures be also smaller, you think? Or it's guessing? At this point, there are too many uncertainties and too many variables changing.
So if we had monetary policy, if the monetary policy of the ECB would be applied in the Czech Republic, the interest rates here would be much lower. This means that basically there would not be that cooling effect on demand and labor market as we think is now starting to propagate in the economy. So I would expect that inflationary pressures would be much stronger than what we see now. The government is going to discuss this issue again this year. At the end in December, and so they will have the full evaluation of the situation, and they will evaluate also not only the fulfillment or expected fulfillment of the Maastricht criteria, but also the economic alignment of the Czech economy with the euro area, which is very important, so that the asymmetric shocks to which monetary policy would otherwise react are not that important. And also the government will consider the current situation, and
which is not very favorable.
Yeah. So I cannot, of course,
predict,
but I think these are the main building blocks on which the decision will be taken.
Excellent. I think we covered the key topics linked to the inflation and monetary policy. I thank you very much for coming here and sharing with us your insights.
Thank you so much.